Welcome to Overnight Market Brief, Pre-Market Edition by AGI Era. Good morning. Today is Wednesday, January 14th, 2026, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. By intersession, the prior session and macro context. First, a look back at yesterday's close. Wall Street finished on a defensive footing. The S&P 500 settled at 69.64, down 0.19%, while the Nasdaq 100 fell 0.18% to close at 25,742. Crucially, the session saw a slight unwinding of risk, but the real story right now is in the macro assets. Right now, the 10-year Treasury yield is trading at 4.155%, down 0.60%. This decline in rates is typically supportive of growth assets. The US dollar index is down 0.13% at 98.785, while crude oil is up 1.51% around 61.85. Gold is also higher, up 1.08% around 4648.76. The simultaneous decline in both yields and the dollar, alongside rising commodity prices, suggests a complex interplay of factors, potentially reflecting a nuanced shift in global liquidity and inflation expectations, rather than a clear risk-on or risk-off signal. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been mixed. In Asia, the picture was mixed. In Tokyo, the Nikkei 225 finished up 1.48%, tracking significant yen weakness, driven by speculation around potential snap elections and increased government spending plans in Japan. Meanwhile, in Greater China, the Hang Seng rose 0.56%, while the Shanghai Composite fell 0.31%. The divergence here was driven by mixed signals from China's December trade data, where exports blew past expectations, but a Reuters poll indicated a weakening mood among Japanese manufacturers and a cooling outlook for China's vehicle sales in 2026. In Europe, major indices are trading with a cautious tone. The economic calendar highlighted a drop in UK business confidence and concerns from the ECB's Villeroy regarding France's budget deficit, providing a somewhat subdued lead-in for US traders. US futures in the open. Turning to the US pre-market, equity futures are under pressure. S&P 500 futures are trading down 0.38%, while Nasdaq 100 futures are down 0.52%. The relative underperformance of Nasdaq futures, despite the overnight drop in the 10-year Treasury yield, suggests that other factors, potentially profit-taking or specific sector concerns related to recent AI tech catalysts, are weighing on sentiment. The daily catalyst. Looking ahead to the session, investors are focused on three key catalysts. First, the ongoing implications of yen weakness and potential Japanese fiscal policy shifts, which continue to influence global carry trades and asset allocation. Second, the nuanced picture from China's economic data, particularly trade and manufacturing, and its global growth implications. And finally, the market's reaction to any further developments or commentary around the AI and broader technology sector, given its recent prominence and the current weakness in tech futures. With a relatively light economic calendar for Tier 1 data releases, flows may be driven primarily by technical positioning and these overarching macro themes. Given the overnight setup in rates and the dollar, the market's path of least resistance appears to be range-bound with a slight defensive bias, pending any surprises from the data releases. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.